Alright, so this video is a little bit on inflation and what you can do with your portfolio with inflation. So if you just Google inflation, you'll see that these articles come out. So there's one article here from AP, why U.S. inflation is so high and when it may ease. You know, look, any American who has bought a carton of milk, gallon of gas, or a used car could tell you inflation has settled in. Economists are now voicing more discouraging messages. High prices will likely last well into next year, if not beyond. So you got this guy, Jerome Powell, head of the Fed chair, said it was transitory. I've been calling for the longest time that it's not transitory. On Wednesday of this week, government says consumer price index has soared 6.2% from a year ago. Biggest jump since 1990. So inflation's going up. They were talking about that it was going to ease, but look at all the factors that are going into it. You pumped all this money into the economy. A lot of people got money that didn't need money. You have stocks running at all-time highs. You have, because of all this money, you have abnormal demand, where supply issues have been a problem. They're trying to say that once supply come on board, should decrease prices, but I don't think you're really going to see that. Once people start upping prices, these restaurants up prices, I don't see them dropping prices. You got to remember too, as these prices come up, your wages go up. So you have, wage increase inflation. So you have these wage pressures going to increase inflation. You have this abnormal supply and demand, and this government created demand from all the stimulus. I mean, let's look at another article. Takes Harvard. You got Harvard, great old Harvard. Harvard economists on eye-popping inflation amid Federal Reserve uncertainty. So, right, they're not sure they're going to vote in the Fed. That's why the markets have been teetering here and there. So now Harvard economists are coming with inflation. Our group has been talking about inflation now well over 2 years now. So one way, and there's many ways to combat inflation, one way that I enjoy or I like to protect my purchasing power is gold. So I understand gold is not the most sexiest thing out there. It's not what's pumped out in the news. However, because it's not pumped out in the news, I'd really look at it. So let's pull up a gold chart. So you have a daily chart of gold. Here's your downtrend line. Here's your Fibonacci. So let's kind of look at gold. Let's break it down a little bit for you. Now, don't get scared off because it's a chart, but in essence, you had a run up from gold. Gold hit a relative low down here back in 2018, not too long ago. And it's almost doubled in price when it got close to August of 2020. So it's cooled off, and gold is wanting to break out from this overall downtrend, right? You have a downtrend here. Gold's wanting to break out. Well, I could have told you that inflation is going to be a problem as gold increases. So why is gold important? Gold serves a couple different utilities. Some of its main utilities is in jewelry, electronics, but the main aspect of gold is a storage of wealth, meaning purchasing power. You got to remember, things did not get more expensive. Your dollar got weaker. And that's what you really have to understand. So gold is so important because you want to hold your dollars in gold. And gold's getting to a point now that as inflation goes up, you're going to see people starting to buy things like gold. Gold increases its value in time of uncertainty, in time of government uncertainty, stock market uncertainty, economy uncertainty, especially inflation. So gold is a commodity, and commodities tend to increase in times of inflation. So these are great inflation hedges. So gold is a nice inflation hedge. This chart looks like it's cooled off from its highs. I would start to be a buyer of gold around here. If you check out the 3-day chart, and it's a great chart to check out, this is your MACD, and you have a nice buy signal on your MACD. And you look at the swings of gold. And this is you have a high, you have a low, you have a higher high, and gold might be printing in a low around here, 1600. So I wanted to just introduce this to my team, to all my subscribers out there. I would look to start entering gold in your portfolio. Maybe start at 5-10% of your overall portfolio. But right now, gold looks like it's ready to break out. And again, this is not going to be a crypto trade where you're going to go up 20-25% over time. But however, you seem to have a decent bottom here at 1735. Another bottom around 1670. I would look to add gold into your portfolio. As your dollar devalues, this is where gold comes in.